Hello, I'm Paul Peterson. As the older adult population grows and life expectancies continue to increase, more and more Americans face the difficult prospect of having to pay for costly long-term care. One of the ways consumers are answering this challenge is by purchasing long-term care insurance in order to help manage the sometimes overwhelming costs of health care. However, long-term care insurance can be expensive, and like any other insurance plan, it has differing levels of coverage and varying premiums. We will look at the pros and cons of purchasing long-term care insurance on today's program. Stay tuned for Aging in LA. Long-term care refers to the many services beyond medical care and nursing care used by people who have disabilities or long-lasting illnesses. Long-term care insurance helps you pay for these services, which can be very expensive. A policy also ensures that you and your family can make choices about what long-term care services you receive and when you receive them. Long-term care insurance generally covers the cost of help in your home with daily activities like bathing, dressing, and eating, or community programs such as adult daycare, assisted living services that are provided in a special residential setting other than your own home. And these services may include meals, health monitoring, and help with daily activities. Also, long-term care insurance typically covers visiting nurses and care in a nursing home. Long-term care insurance is probably not for everyone, but with soaring health care costs, insurers increasingly restricting coverage and eligibility, and seniors need to stretch retirement savings through more years as we live longer, it's a good idea to consider it seriously. Our guest today is Jack Weinstock. He is a long-term care specialist and a financial representative of the Northwestern Mutual Finance Network, which provides expert advice on insurance investment products and services, and retirement and estate planning. Jack, thanks so much for joining us today.
Paul?
It's good to see you, my friend.
You too.
Thanks for making time to come down here today.
My pleasure.
Because this is kind of a new feature in terms of insurance products, isn't it? The long-term care policy?
It's been around 30 or 40 years.
Really?
Yeah.
Well, that's half of my life for sure. But what distinguishes long-term care insurance? What makes it appropriate in some cases, Jack?
Well, long-term care insurance can help families when somebody isn't able to feed themselves, bathe themselves, dress themselves, go to the bathroom themselves, have control of their bodily functions,
right,
or be ambulatory, which is known as the activities of daily living. When you can't do a couple of those things, you usually run into problems. You might need somebody to come in and help you in your own home,
right,
or you might need to go to an assisted living facility or a skilled nursing facility, and the insurance will pay for that for you.
Well, now what sort of family, in what sort of circumstance should seriously consider a long-term care insurance policy?
Well, I think any family should consider it, and then it's going to be dependent on your budget, if you can afford a long-term care insurance policy, or if you can afford not to have a long-term care insurance policy.
Well, and let's talk about that now. Afford not to have one. In other words, there are calamities out there, and that's just the facts of life. So what are some of those circumstances where having a good policy for long-term care really can save your bacon and save your assets?
Well, if somebody were to need long-term care, okay, and you have children, and maybe the children want to see their inheritance,
yes,
okay, and so they might want to protect their inheritance by having someone else pay for all of the care. That's where an insurance policy could come in. If you don't have that, there might be arguments between the siblings, and perhaps the parent might not get as much care. You know, those things happen.
Yes,
so
they do.
a long-term care insurance policy can guarantee that provided you meet the criteria to collect on the long-term care insurance policy, that money will be coming in, inheritance, or even, if you have charitable inclinations.
Right.
You,
That's yet another reason. Well, I know why I'm beating this drum incessantly. Like, why don't younger people think about the predictable consequences of aging? They should be thinking about insurance not only for whole life, but long-term care in their 30s and 40s when they have some income and I mean, these are predictable outcomes. How about caregivers? So many of us, the sandwich generation, are in fact mature adults, but we're caring for aging parents. Is that the kind of person who ought to be considering long-term care insurance, not necessarily for their elderly parents, but for themselves?
Yeah. Well, backing up a little bit, you mentioned why don't younger people do it. I think originally when long-term care insurance came out, it was perceived that it was for old people, okay? And that's not true, because people in their 20s, 30s, 40s, they have injuries, they get hit by a car, and they need care. Things happen to people, and it could happen for the rest of your life. Going to the sandwich generation, yeah, people nowadays, my age, I'm 44, do I ever have to take care of my parents? Do I have to take care of children?
Right.
How do I take the income that's coming in? How do I protect that? And how can I plan for my retirement? How can I plan for children's education? How can I help out my parents if my parents haven't planned? So these are the type of questions and topics I deal with on a regular basis.
Right.
And there are ways to do the planning for that.
Well, nearly all of our parents prefer to age in place. They want to be at home.
Right.
But in-home services can be very expensive, especially if it's skilled nursing help. So a policy, a long-term care policy, if you make provisions for it, they can cover that kind of additional services, correct?
Right. Yeah. Long-term care insurance typically covers at-home care, adult living facilities, adult daycare, assisted living, skilled nursing. Most people think that if I buy long-term care insurance, that's going to help me if I go into a skilled nursing facility and I don't want to go into a skilled nursing facility. Right. Well, most people that I work with, they buy it so they can stay in their own home and be taken care of in their own home, and their family members don't have to take care of them. Somebody else is going to come in and it's going to be paid for.
Yeah, we were talking earlier, and I really think this is important for our audience to know. This is a heavily regulated and a lot of oversight in this portion of the industry, correct?
Right. Yeah, it is. I mean, every state has their rules and regulations. It would be similar with other insurance products as well, life insurance, disability, annuity products. But a lot of seniors buy long-term care insurance, and there's some products like annuities and long-term care insurance where the state and federal government doesn't want abuses by people like me that help people purchase long-term care insurance.
Right. But the truth is, this should be one facet, frankly, in a portfolio for a family. I mean, a lot of people, maybe their biggest asset is their home itself, the equity in that home. Maybe it's paid for. And this is one of the tools where you can protect these assets and be able, still with skilled care as you grow older, and you will need care, to protect that asset so you can bequeath it to your children.
Right. A lot of people refer to long-term care insurance as an asset preservation tool.
I see.
Because as you are planning for your retirement, you put aside a certain amount of money. It could be in a business, it could be investments, wherever you're putting your money, and you have a distribution strategy on how you're going to be spending that money. Well, if something catastrophic happens where you might need long-term care, is that planned for? And the majority of the people that I've met with and other people out there, they don't have that plan there. They say, well, if it happens, and I'll deal with it then. Well, that's not always a good strategy.
No, it's not, because it places a terrible burden on those that need to care for you, not to mention our government. These are...
The government doesn't want to pay for this.
No, I understand. No, they don't. And yet, these are predictable, real-life issues because look how long we're living.
It's more predictable now because it used to be you retire at 65, you have enough money for retirement for 10 years, and you die at 75.
Right, exactly.
Now people are retiring maybe at 55 and still living another 40 years.
Right.
And you need to plan for that.
Right. Now, how does it work with spouses? It is a fact of life that Females outlive males by a significant number of years.
Gap's closing a little bit.
Well, thank goodness, you know, just for our personal interest. But the fact is that dollars might be spent for the care of the male, the husband, if you will, and yet the wife is going to survive as a widow for another 10, 15 years.
Right.
So this, again, is a way to help protect her as well, correct?
Yeah, well, long-term care insurance, if you don't have the long-term care insurance and you have retirement assets and you spend down all your retirement assets and you die and you have a spouse that survives you, hopefully you have a large life insurance policy to replenish the assets.
Well, exactly.
But some of those assets you can't get back anymore.
Right.
You know, like a house, perhaps.
Yeah. Now, we need to talk prices. They're clearly in the insurance business. The younger you are, the quicker you can make this decision, the lower your premiums are going to be.
Correct.
I mean, that's just the way it is. But what kind of price range are we talking about? What should a person be making, or what kind of disposable income do they need to avail themselves of long-term care insurance?
Kind of a loaded question, but I'll
good.
try to answer that for you.
Okay.
A lot of people say if you know, I've read articles where if you have over $1 million, you don't need long-term care insurance. I totally disagree on that. It's based on the individual. I've worked with people that have $30 million estates. They're buying long-term care insurance because it's easy for them to write a check for, you know, $4,000, $5,000, $6,000, $10,000 a year for a couple for long-term care insurance instead of ever paying $100,000, $200,000 a year for many years.
For care.
On the other end of the spectrum, there's articles that say if you have to pay over 5% of your income or 7% of your income, you shouldn't buy long-term care insurance. You know, the government's going to take care of you. Okay, so
I got you. But
it's all based on where you're at in life and what do you want to protect and how do you want to be cared for. And do you want to put the burden on your children or friends, or do you want to put the burden on the insurance company?
Right. Now, it's always important to discuss these kinds of decisions, significant financial decisions, with people close to you. Is this something where a skilled attorney with senior affairs would call on you, Jack, to come in and consult with him about, look, we need to structure this not only for retirement and living expenses, but for the potential for let's say, increased medical needs. Is this something you can do and sit down with people?
Yeah, I work with estate planning attorneys. I work with their CPAs, with elder law attorneys, and we sit down and we put together a game plan. And a lot of times insurance is the best risk management tool that there is out there, whether it's life, disability, long-term care.
Well, you mentioned something to me when we were talking before that I thought it was really amusing, but it's true. The fact is, you know about these special needs and long-term care. Can you share with us what you told me at breakfast?
I think what you're talking about is the game I play when I do a seminar, right?
Yes, that's the one.
When I do a seminar, one of the first things I do is I raise my hand and I say, who here other than me has ever needed long-term care in their life? And I raise my hand and everybody looks at me and it's like, oh my God, what happened to you? And I said, well, when I was 2 years old, my mom used to change my diaper for me. She used to help me get from my bed to my chair. She used to help me eat. She used to help me bathe.
Right.
Those are all the same needs that you need as you get older. You know, not everybody, but the majority of people, once you turn 85, they say half the people out there are going to need some help.
Right, and
so I've already needed it. I was 2 years old.
But you know, that's illuminating because it sometimes it's a little frightening to look at the close of life, at the end of life. But if you recast it back to what is so easily and so charming a time in our life to be young and dependent, it helps better understand just how great those needs can be. I know there are some people who would never consider needing help going to the bathroom, but there we go.
Yeah,
that can be the product.
It can be a temporary thing too.
Yes, that's
it can be temporary or it could be permanent.
Yeah, exactly. Well, we're gonna talk more about this, obviously, but it's time for a short break. When we come back, we will continue our discussion of long-term care insurance for senior citizens. We'll be right back. Please stay tuned.
Hey, buddy, what's shaking? We're not prepared for an earthquake. I love the rain. We're not prepared for a flood.
Sure, in the movies, this is all pretend, but in real life, you gotta be prepared for any type of an emergency. You can't predict, but you can prepare.
Yeah.
How'd you know? The ball called.
Be prepared at LAFD.org.
For many senior citizens, there'll be no golden years. They're victims of a hidden crime called elder abuse. It happens in nursing homes, in board and care facilities, but most often in the elder's own home, at the hands of people they know. Learn the signs of elder abuse and report all suspected cases. You and I must be the lifeline our senior citizens so urgently need.
Welcome back to Aging in LA. Our topic today is long-term care insurance for seniors. Our guest is Jack Weinstock, a long-term care specialist with the Northwestern Mutual Finance Network, who works with seniors to achieve financial security. Jack, this is actually a fascinating topic to me because there are certain events in life that we can plan for, that we can predict, that we can look ahead and say, I can take steps to either lower my risk or the burden I will place on my family. And we talked about how with children there is a kind of an acceptance that their needs need to be met. But a policy might very well be, for some people, a very big financial burden. So is there a specific number you can give me about the costs? Is there a, like if somebody says, oh, it only costs you $12,000 a year, is that a real number, or did I just make it up?
Well, it was both. It's a real number, and you just made it up.
Thank you, Jack.
You're welcome.
No, but seriously.
Long-term care insurance has a lot of moving parts to it.
Okay.
And it's a loaded question, again, because it does depend on your age.
Right.
Some
age.
companies, it's dependent on your health. You know, they might give one price for somebody healthier than somebody else.
Right, of course.
Okay. There is underwriting for individual long-term care policies. There's a lot of group policies out there where you can automatically get the policy.
Really?
Okay. But sometimes the coverage is a lot different than on an individual policy. You know, so it really needs to be looked at by somebody. You know, help you out on price. You again, moving parts. You can have a benefit that lasts, say, 2 years, 3 years, 4, 5, 6 years. That means how long the insurance company will pay, or it can pay for an entire lifetime. So the longer they pay out, naturally, the more money they need to collect from you in the way of premium. There's waiting periods, which you can consider as your deductible period. How much money do you want to pay out of your pocket prior to the insurance company starting to kick in? And there's a lot of other bells and whistles, so the prices do vary.
Yeah, I always kind of, you hope that there's a simple answer, but life is not like that. How does this fit, how does long-term care insurance fit into the Medicare, Medi-Cal puzzle here for our Los Angeles?
It fits in very well.
No, good. It fits.
And also to back up on the price question.
Yes, of course.
You know, right now the cost of long-term care, okay, not insurance, but the cost of care can range anywhere from somebody at home spending $13 to $15 to $25 an hour to going into skilled nursing facilities, single room, $200 a day. So you could look at anywhere from $35,000 to $100,000 a year versus buying a long-term care insurance policy where instead of paying that much and having ongoing cost, maybe you're getting it for $5 or $10 or $20 a day that you're paying now.
Right. Well, as you well know, since you know our family circumstance, the first time I saw that monthly bill in a full-on Alzheimer's unit, and it was just under $7,000.
In a very nice facility.
A very nice facility, it's true. But it was $7,000 a month.
Right.
And I'm thinking, that's $84,000 a year.
Right.
And so for me, as I've told you before, this makes sense. Better $5,000 now because Alzheimer's is a growing reality for many of our seniors.
Right. Well, by buying long-term care insurance, you're leveraging your assets. You know, if you can afford to spend $84,000 a year for care, that's great, but wouldn't you rather pay $5,000?
Oh, absolutely.
Of course. So would it make sense to purchase it maybe in your 30s or 40s and spend, say, $2,000 a year for 40 years and still never pay the cost of actually having to pay for long-term care?
Right.
That's leveraging your assets.
That makes such sense.
You'd mentioned Medicare, Medicaid.
Yes.
In California, Medicaid is Medi-Cal. And a lot of people get confused when you say Medicare, Medi-Cal. They think it's one and the same.
Please, that
and it's not.
And Part B and all these things. Oh, it's confusing.
And Medicare, well, I'm going to back up.
Okay,
Long-term care insurance pays for chronic care. Health insurance pays for acute care.
Okay.
So when you're in a hospital, once they determine that this is chronic, they're done with you. So now you need to go somewhere else
Right.
and have care. That
Yeah,
would
it might be
chronic
a skilled
care.
nursing facility for
Or it
a
could be
long
at your
term or
own
short
home.
term.
Right.
Mhm.
So there's two separate things. Medicare will pay for some long-term care in a skilled nursing facility, provided you meet certain requirements.
Right.
First 20 days is free. The next 80 days there's a deductible.
Right.
Then you're on your own.
I see.
Medicaid in the rest of the country, we're different here. It's called Medi-Cal.
Mm-hmm.
It's the same thing. That will pick up for skilled nursing. It's not going to pick up for in your own home. And most people are cared for in their own home for several years before they ever qualify to get into a skilled nursing facility.
Right.
Pay down your assets,
Right.
spend down your assets, and then have Medicaid or Medi-Cal kick in.
Well, and then maybe you can't afford the kind of facility that, frankly, you may want, or your family can't pay.
Not only that, but there's a certain amount of beds in the facilities that accept Medi-Cal.
Mm-hmm.
And if those beds are full, then you have to go further. I think you've experienced this. You have to go further and further and further and
Jeez,
further away, right?
Tell me about it. Yeah, I thought it was really astonishing that within my own family, as soon as all the resources were gone, the care sort of evaporated.
Right.
It's like miraculous.
Well,
And-
see, long-term care insurance allows you to keep control of what you want.
Right. Now, what happens in the event you have a policy in place and sort of the unexpected happens, that there is a fall and you become cognitively disabled? Because we have lots of that. People have strokes and
Right.
suddenly aren't able to function.
In a situation like that, like a form of dementia is
Right.
what you're
Right.
talking about, like Alzheimer's disease,
Right.
that's an automatic trigger. So in all of the long-term care insurance policies out there nowadays, okay, there'll be a trigger of 2 of 6 ADLs, activities of daily living, which I think I mentioned earlier, or it was in the other room.
I don't know, probably
remember.
in the other room.
Bathing yourself, feeding, dressing,
Right.
controlling your bodily
Now,
functions.
the activities of daily living. So if you hear of that ADL, that's
ADL,
okay.
yeah. So activities of daily living.
Right.
If you can't do 2 of those, that triggers a benefit. But a form of dementia is an automatic trigger. Because when you start having dementia, most likely you're still going to be able to feed yourself, bathe yourself, dress yourself, but you do need 24/7 care
Right,
at
because
some point.
and sometimes it's a simple reason. It's like you know what a telephone is, but you don't know any longer what 911 is. So how to
Right.
summon help when you need it. Well, I gotta ask this question. You and I've been friends
Okay.
for some time. Do your parents have long-term care
Yes,
insurance?
they do.
Ah, see, okay, so that's good. That's. But what should a
I
person
bought mine the same day.
really?
Yes.
See, that's being smart.
Yeah, it is.
What should you know about the person and the company that you plan to deal with or discuss these
Well,
issues?
you should take a look at the ratings of the company. There's 5 rating companies that most people look at these days. AM Best, Standard & Poor's, Moody's, Fitch, and Comdex.
Okay.
Okay, and each one has different scales of how many A's they have, 100%, this,
Right.
that. The other thing that you should look at is a publicly traded company or a mutual company, because they're run different. Okay.
How so?
Well, a mutual company, a public company, you can buy stock in the company, and they look out for their policyholders, but they also look out for their investors.
Right. Okay.
Okay, so I'll leave it at that.
Yeah, but there's some tension
on mutual
there.
companies,
I understand.
and I work for a mutual company. I also can represent publicly traded companies as well.
Okay.
But in a mutual company, the policyholders basically own the company, and the profits are distributed back to the policyholders in the way of dividends. So like Northwestern Mutual, for example, and another company, New York Life, both are mutual companies, and they're paying dividends on their long-term care insurance. So the long-term care insurance conceivably can get lower and lower in cost. It's not guaranteed, but it's happening. It's happening right now.
Now, it's so important. I want people to make sure we know how people can reach you, Jack,
Right.
and Northwestern, because it is important. There's so much information on the internet. People can do some background investigation. They can do all of these things, and if you would share with me your website so people can.
You told me I
come to
couldn't
you
have the
directly.
tattoo of my
No, it's no
website.
tattoo. We actually do it the old-fashioned way.
Well, on my website, I have compliant information in all 50 states that I have a PowerPoint presentation, third-party articles, there's information about Northwestern Mutual.
Right.
And I suggest to people that they go through the website even prior to meeting with me so they can come up with some of their own educated questions from the PowerPoint presentation, and that allows us to have a better conversation.
But you're specially certified in this because the issues are unique to seniors, well, or for babies too, as we've discussed.
Right.
And that's an important thing to look for as well, correct?
I've had extra training with long-term care. I'm certified in long-term care, so I took some special classes and received that designation. And I did that to basically have more knowledge, with long-term care, and not just long-term care, but finding out, does somebody really need to have it? Let's look at the different avenues.
Jack, I'm so sorry, but it looks like our time is up for today's edition of Aging in LA. Thank you so much to my friend Jack Weinstock with the Northwestern Mutual Finance Network. And now it's time for our new feature on Aging in LA, Senior Stat Shots, where we look at statistics that pertain to senior citizens. Today, not really statistics, but some tips on how to retain a greater sense of control in your life as you plan for your future. Understand the signs of aging. Communicate with your family in advance of any health problems. Prepare, both financially and legally. Know the availability of community services before major problems occur. Decide while you are well how you want to handle situations. Organize the resources that might be required later. Share your planning process and decisions with the people closest to you. And that's today's Senior Stat Shot. The Los Angeles Department of Aging produces this program with CityView, Channel 35, so that seniors living in Los Angeles and surrounding communities are well informed on the many issues that face them in everyday life. And also to let you know of the many services that the Department of Aging offers our senior citizens. Now, we'd like to hear from you with comments on the program, what you like, what you think can be improved, or ideas for future programs. So please, give us a call. The number's right there on your screen, area 213-252-4088. That's 213-252-4088. Call us with your comments and ideas. We look forward to hearing from you. I'm Paul Peterson for the Los Angeles Department of Aging, the people here at CityView, Channel 35, and all of our guests on Aging in LA. Thank you so much for watching. We'll see you next time.